Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of January 30th through February 3rd, where we'll try to figure out what is the Fed's next move now. So we'll look at how the markets performed last week. We'll look at analyzing the market data, the economic data. We'll talk about earnings reports, etc. And again, try to figure out what is the Fed's next move now. So stick around. We'll also share with you a couple tools towards the end of the video on tools that can help you determine what is the Fed's next move now, or what does the market think the next move is for the Fed now. Welcome to everyone who's joining us in the live chat. Ollie in the Bay, Douglas PC, The Blind Trader, Ricky Khan. Thank you all for joining us today in the live chat. So here's our Google document with our notes for part one of our weekly trading game plan for this week. These Google documents with our notes from our weekly trading game plans are publicly accessible. You should be able to find a direct link to this Google document in the description box below, as well as to the publicly accessible Google Drive folder where we store all of our Google documents with all of our notes, so you can refer back to those. These notes documents have links to bonus videos, to all the tools we're using for our market analysis, etc. And again, so you can refer back to any of these notes at a later point. Welcome, Tony Roses. Glad to see you as well. So let's get started and let's see if we can figure out what is the Fed's next move now. So just a quick reminder, we'll talk about these and we'll take another look at the January Barometer, what kind of January effect we've been having this month since we're wrapping up the month of January this week. We have a couple videos on what is the January Barometer, understanding the January Barometer, and also understanding the January effect. January effect explained for beginners. So again, you can reference these videos via the links in our document in the notes, as well as on our BeachBum Trading YouTube channel. So let's get started. We'll jump over to FinViz. We'll see how the markets ended up the week. So we can see, it was kind of choppy on Friday. They were trying to run the markets up for most of the day, and then towards the end of the day, all the major indices declined somewhat, but they all ended up positive. The Nasdaq was the outperformer at almost 1% up. We can see it was kind of split on, a little above 50% advancing, more new highs, about 75% or so. We've now got 77% above the 50-day moving average, but it's still pretty split, 60-40 or so above the 200-day moving average. And it ended up kind of bearish, but again, it was, most of the day was an uptrend, and then just towards the end of the day did everything kind of decline. So if we look at the heat map, we see the FANG stocks outperforming, Tesla, NVIDIA, a couple of Verizon, etc. The negatives were energy. We'll see that when we look at the sectors, the industries, etc. Basic materials and energy kind of underperformed. Look at some of the news, challenges for energy. Tech layoffs, we'll talk about in our strategy section, some of the earnings, the layoffs, etc., as well as, again, some tools to see what the Fed's next move might be. See, oil had been up, broke down below 80. It's now 80 was providing a support. It's now broken below 80, so I suspect 80 is going to provide some resistance. We'll see if it declines back to the 75-70 range, or if it tries to break above 80 again. Natural gas had been declining, and then we see a little bit of a pushback up to just below the 3 range, 285. Gold's been holding up over 1900, hasn't really pushed up, and we'll see all these again in the futures. And we see all the futures for the indices is pointed up right now. Treasury, this was a little ironic. There was some strange behavior on Friday. It's atypical from what we saw in the past, because normally when we saw Treasury yields push up, that tended to push the markets down. Here we had yields going up. We also had the dollar going up, and the markets were still running. And again, as we've talked for several weeks, I think that was just an exuberance reaction. There's a lot of money that's been wanting to pour back into the markets, push the markets back up, and so I think they kind of ignored these signals, and they just wanted to run the markets based on some of the economic data that we saw. So we'll look at each of the indices. Welcome, Easy Mike. Glad to see you as well. Thank you for joining us. The Blind Trader. Glad to see you as well. Flip of the Shippa. Got a good crew today. I hope everyone's doing well. Hope you had a good trading week. So we'll look at the SPY on the daily. Again, we see it's trying to break out of that upper trend line. Looks like it got rejected, came back down, it's hugging very close to that trend line. We've got this narrowing channel. The moving averages are tightening up, so it did break above. It looks like that's the 200-day moving average. So again, everything's tightening up, consolidating. It's preparing to break one way or the other, and we'll have to see which direction it goes from here. If we jump out to the weekly, again, we can see it's kind of testing that 50-week. It broke above. We'll have to see if it can hold or if it gets rejected. Again, the averages are tightening up. So again, everything's tightening up, consolidating. We'll see if, we can get an overall breakup into a new bullish trend, or we can see, again, the longer term trend is still bearish, still downtrending. So it'll have to break up, make a new high. Hasn't quite tested that high yet. So we could expect a test of that high, and then we'll see if it gets rejected or if it is able to break out and make a new higher. We did make one higher low. So there's the possibility to go into an uptrend. Look at the Qs. We saw, towards the end of the week, they were really trying to run tech again, and we'll talk about some of our trading strategies along those regards. We can kind of see a double bottom potentially, so maybe the NASDAQ has made a bottom, although it looks like it's getting rejected off that 50-week moving average, so we'll have to see if it rejects and if it goes back down to that support level or if it's able to break out. So the Dow had been outperforming. It's still holding up over this 50-week moving average. Looks like it's consolidating. So again, we'll have to see if it can make a new swing back up. Look at the IWM. IWM looks a lot like the SPY, so it's getting support from that 50-week moving average. It has broken up above. Looks like it made a higher low. So again, it looks like it's kind of testing the previous high. So we'll have to see if it can make it up to test that previous high there and go into an uptrend or not. Look at the VIX. VIX has been pretty quiet, still declining. Right now, it's the futures showing at 1950. If I look at the actual quote currently in Thinkorswim says 1851. So again, the VIX been pretty tame, even with some of the economic data. Again, even if it pops up a little bit, it very quickly retraces. So we'll have to see what happens with the Fed interest rate decision on Wednesday, if we get some volatility out of that or not. So let's look at the groups and the sectors. So on Friday, again, you saw real estate, communication services, consumer cyclical, kind of underperformers previously got run. Technology was relatively positive for the week. We can see technology, real estate, communication, and cyclical were all outperformers. Again, Friday, energy and basic materials saw a rotation out, profit taking in those areas. Again, watch those sectors for rotation, money flowing back in. So pretty constant rotation. We see healthcare was the only underperformer for the week. Again, everything was positive for the week. And for the month, we can see again technology, consumers, all the underperformers from last year pretty much were the outperformers in January, which is a typical consequence of the January effect, right? And we saw the outperformers previously, defensive and utilities, were the underperformers for this month. So going into February, we'll have to see if we get a rotation back into some of the previous outperformers, energy, etc., consumer defensive. Some of these too will be more sensitive to the interest rate decision on Wednesday. Welcome, Walter Alliance. Thank you for joining us. Glad to see you as well. So if we look at the individual industries, you see uranium's been up for a couple weeks now. Solar was up, last week was down. Every day there's a rotation in and out of solar. So again, if you're a shorter term trader, you can, play these sector rotations, make some money. Travel was up. Looks like several travel sectors, autos, recreational vehicles, REITs, real estate was up. On the bottom, again, basic materials, and we've seen this rotation, right? Coal, they rotate in and out of coal, in and out of gold, in and out of steel. So again, watch for that rotation. Again, I wouldn't be at all surprised to see a rotation back into particularly silver early next week again, as well as gold, coal. For the week, pretty similar, real estate, uranium, and the underperformers, railroads. Again, there's an issue with the railroads underperforming. Again, silver didn't have a good week. Coal didn't have a good week. Copper was actually down for the week. So again, when we get to the futures, we'll be able to see those trends as well. So I hope that helps. Okay, so let's talk about some of the economic data we got this week, and we already kind of saw some of the reactions to it. Just a quick reminder for everybody, none of our videos are financial advice. We're not financial advisors. We hope we provide this for education and entertainment purposes only. So do your own due diligence, etc., your own market analysis, make your own decisions, but hopefully this will help you in those regards. So not a whole lot Monday, Tuesday. Wednesday, we got mortgages. You can see the rate is declining slightly, although the housing market's still pretty much in a recession. And again, stick around to the end of the video. I don't know if I put this in the notes yet, but I've got some ideas relative to this housing recession and some particular segments of the industry we might want to stay away from because of this. Again, crude oil inventories were significantly down, slight build, but still down. Utilization was also quite a bit down. You can see refinery utilization was down, and even despite that, the price of oil went up to like 81, 82 at that time frame and didn't break down till later in the week. So Easy Mike and I have been talking in the Ben's and Good chats that my comment is that I don't think people are paying attention to this data anymore. It's much more technical moves in oil and natural gas, and again, even the weather data, etc. It doesn't seem to be impacting those prices. I think it's mostly moving technically and not based on the data at this point. So then Thursday, we got GDP data and jobless claims data. You can see continuing claims is up a little bit, but not significant. We got PCE data. And again, the market, since this is mostly as expected, the markets, rallied. They've been waiting for, anything that wasn't terrible. They wanted to rally. So they took this as a go ahead and start rallying. So again, we saw technology start to rally on Thursday, continued through most of Friday. Again, we saw positive GDP data. So that says, okay, according to this so far, we're currently not in a recession. Now, if Are we going into a recession again? Are we dipping in and out of a recession? I'm not terribly surprised that fourth quarter was positive. I think, again, as we've been talking, I think people spent their money. They traveled for the holidays. They spent the rest of their money for the holidays, gifts, etc. And my humble opinion, again, not financial advice, but I think people have spent their money. I think we've seen consumer credit balloon up, savings decline somewhat, and again, I expect a downturn after people have spent all their money, and interest rates are increasing. Also, initial jobless claims was less than expected. So again, markets reacted exuberantly to that. Although again, this says that the job market's very resilient. So the Fed can be more hawkish, and between this GDP data and the jobless claims data, the Fed can be very aggressive and very hawkish. They don't have to worry about a recession. So theoretically, they could raise interest rates more aggressively without fear of high unemployment or pushing the economy into a recession. But again, we'll see when we get to the predictions. Again, then Friday we got core PCE data, again, pretty much as expected. So since it wasn't bad, the markets took that as a sign to go ahead and rally. So again, we saw a rally through the most of Friday. Consumer sentiment continues to improve just a little bit, and the inflation expectations are decreasing slightly. So again, all that data, was taken as positive, and again, through most of the week, or most of Friday, they ran the markets up. I'll jump over to the investing.com economic calendar, see if we missed anything, and then we'll look at the calendar for next week. Just a quick reminder, as this data comes out, we have a channel, a Surf the Markets channel in our Discord. Our Discord's free to join. You can find a link in the description box below, and I'll throw it up in the banner as well. Again, I try to post this data as soon as I'm able off investing.com as it comes out. And we also have this feed now from Market Watch Economy, so some interpretation, some articles related to the data as it comes out. You can find that in the Surf the Markets channel in our Discord. Let me zoom our Discord page up a little bit, and maybe, I don't know if maybe that's too big. So again, join our Discord, join in the discussions. You can get the market data, economic data as it comes out. Also, while I'm here, let me point out that we recently added another channel. We had a poll, had some input from the BeachBum trading community as to whether we wanted another channel with earnings news, earnings reports, because as we'll see, earnings matter, and it's important to know who's reporting earnings, what their results were, etc. So we've added this feed from this earnings news, EPS GUID Twitter account, and so the earnings reports now get automatically posted to this channel. So again, you can see those as they come out in our Discord. I thought it was better to have them in a separate channel. If you find this too noisy, you can mute the channel. If you don't want to see it pop up notifications as each earnings report comes out. That's totally up to you. Okay, let me grab a drink, catch up with the chat. I'll try to zoom this data up a bit. And then we'll make a quick spin through this and look at the earnings data and then the schedule for the Fed's interest rate decision next week. Okay, again, Monday, not a whole lot. Tuesday, again, we got PMI. It's generally, positive. It was, better than expected. generally. We looked at mortgage rates. We looked at crude oil inventories. And Thursday, again, building wasn't that terrible. We saw jobless claims. Durable orders was actually not down as much as expected. Again, PCE was a little better than expected. GDP was better than expected. Jobless claims, again, better than expected. Wholesale inventories are down, so that's a positive. Friday PCE data was, better than expected. Again, rallied the markets, and the consumer sentiment was generally improving slightly. Oil rig counts, again, down a little bit, but even despite that, we saw on Friday now oil is declining. So even though supplies decreased, the price went down. So again, I don't think it's moving with the data at this point. I think it's moving much more technically. I missed, where's the natural gas storage? Right there, we saw that was very negative, a big drawdown in natural gas, and yet the price went up. So again, it's moving technically, not based on the data, in my humble opinion. So next week, here's the economic calendar for next week. Not a lot on Monday. Tuesday, we've got some employment data, housing, Chicago PMI, again, not a whole lot. Got OPEC. The news I've heard so far is OPEC's not expected to really change anything, so we don't expect a whole lot out of that. Non-farm employment. So this might, they're talking about this as an ISM, as an input to the Fed's decision. It's, coming pretty late, right before the Fed has their meeting. JOLTS, again, job openings. So these are inputs to the Fed's decision. Then we get the Fed statement at 2 p.m. on Tuesday. So again, they'll release the statement. It'll tell us, you can see the expectation here. Again, we'll look at some more detailed tools, but right now this expectation in investing.com is for a 25 basis points or a quarter point increase. So that seems to be the general consensus out there. Again, if this comes out other than expected, if they go 50, you can expect a pretty violent reaction from the market. So be prepared, have your trading plan in place that, if it is as expected, what are you going to do? And then if it comes out different than expected, what are you going to do? And then Powell will come out at 2:30, have his press conference, and watch for volatility based on his comments. If he makes more hawkish statements or more dovish statements, the market's going to react, and it reacts pretty quickly. So after that, that's going to be the major event for the week, and I expect a lot of people, we might get some activity early in the week, and then people will be positioning for that Fed interest rate decision, and then it may get kind of quiet, kind of slow, while people don't make any major moves ahead of that decision. And we get jobless claims data, non-farm payrolls, productivity, typical oil, natural gas data, not a whole lot. Again, the major event's going to be the Fed's interest rate decision. We get ISM, et cetera, for January. So again, the big event, starting at 2 on Wednesday, and then, with the press conference as well at 2:30. So also, got a heavy earnings calendar. We're right in the middle of earnings season, and earnings matter. You can see if companies not only do earnings matter, but their guidance matters. We saw with like Microsoft, they beat on their earnings, and then when the press conference came out, they gave poor guidance, and so they initially ran it. It was partially an algo reaction based on that headline, and then they came out and gave poor guidance in their conference call, and it dumped. So again, earnings matter. Keep an eye on the earnings calendar. We just released this video with our previous discussions of where you can see the earnings, how you can find earnings, how to make money trading when you get irrational reactions to earnings, and those are good opportunities. So again, now we have the data coming out in the earnings report channel in our Discord as well. So hopefully that will also help you be able to react to these earnings reports appropriately, find sympathy plays, etc. So again, you can see that video for more detail about our previous discussions on how to make money trading earnings. So we'll take a quick look in investing.com and then also in Webull. So again, we've got a lengthy calendar. I'm not going to go through it in detail. You can look for companies of interest to you that you're looking at buying, or in a segment. We've got some banks, etc., in a segment that you were either holding or interested in making a buy. So finance, got several sub-finance, SoFi, J&J, Snack Foods. More financials, again, long list. Citibank, more financials. Pfizer, so some drugs. Amgen, we got AMD, so semiconductors. Mondelez, consumer defensives. Autos, oil and gas. So Western Digital, software, hardware stuff. So again, pretty much every sector is going to have something, and so it's worthwhile knowing what's coming up and how it could affect your portfolio or your trading plan. So okay. So we'll jump over to the market screen in Webull. You can also see another calendar. Again, in that video, we show you more detail how you can, dig into the earnings calendar in investing.com and in Webull in more detail. But again, just to highlight the earnings calendar, if you go to the market screen, I'm on the online browser version of Webull. You go to calendar, you get earnings. Then you can see a near-term schedule of earnings. So in the release time, whether it's an aftermarket close, before market open. So again, very, very near term. So we could see, AMAT, which is a semiconductor, reports aftermarket on the 29th, etc. So we got a couple semiconductors coming up pretty quick. And tomorrow we'll talk about how we're trading, how we're playing the semiconductor segment right now. So we are interested in trading based on that. So we see in the histogram, again on Friday, we had more advancers than decliners. The advance, a very small percentage, was where most of the advancers were. Net inflow, again, we're seeing now we see a reversal. NYSE outperformed the NASDAQ on Friday. So the past couple weeks, the end of the week, we saw the NASDAQ had been outperforming. So after they ran tech for a couple days, you can see it looked like money flowed back out late on Friday. So it looks like they ran it a couple days and probably took profits. And now they're probably positioning for the interest rate hike. So we'll look at the best performing industries for the week. Government, so some aerospace, automotive was positive. Again, uranium's been positive. Home building and construction was actually positive. REITs, again, real estate, entertainment, aerospace and defense was slightly positive. Construction, so again, a lot of construction was positive. I guess people figured the bottom was in on construction. Paper products, utilities, so a lot of positivity this week. Retail was even positive, and again, semiconductors was positive as well. So let's look at the ETFs, and then we'll also see in our spreadsheet, our Google Sheet tomorrow, we'll dig into individual ETFs in these various segments and how we can trade these various segments, but we'll look at what direction they're pointing right now. So you can see up on the NASDAQ, TQQQ is positive on the NASDAQ, positive small caps. Mid caps, pretty much all positive. QLD, another positive on the NASDAQ. Up on the Dow, mid cap in S&P. Again, a couple mid caps, so small cap and mid cap in the S&P. And again, we've been seeing that pretty much the month of January, and we kind of suspected that we might see a run up in the small caps and mid caps. Short on the VIX. Again, we saw the VIX retrace quite a bit. Short on the euro. That's interesting. Small caps on the Russell, so up on the Russell. Industries, healthcare, slightly positive. Communication service, positive. Energy was negative. Basic materials was negative. Technology, positive. Again, we saw this in the sectors and the groups. Consumer cyclical was positive. Real estate positive, and financial services positive. So, and that's kind of interesting. And we'll talk tomorrow about how we're trading, how we're positioning in the financial services sector as well. Carbons, we've seen this for a couple of weeks. Carbon offsets positive. Natural gas, okay, so here's a positive. They're betting up now in natural gas. So again, we'll talk about these are a couple ETFs we have in our Google Sheet, and we also have Boyle, which is the 3x leveraged up, bullish on natural gas. And we'll talk about how we're positioned in natural gas as well. Again, carbon, natural gas. Softs positive, so that's like cotton. Coffee also has bounced back up, and we'll see that in the futures. I'll leave that up for now because I'm going to use it. So let's jump over to the futures and FinBiz. So again, we can see these pushes up in pretty much all the indices towards the end of the week. A little negativity earlier in the week, but then all the indices pushed up. NASDAQ hasn't quite tested that previous high. S&P's testing that previous high. Dow hasn't really tested its high yet. Russell looks like it's broken out from here, from this near term of the futures. European looks like it kind of went sideways. DAX, same way. So Europe kind of went sideways. See this downtrend in the VIX. So again, after it popped up, it's been pretty much retracing, reverting back down since then. So we'll see if this interest rate hike gives it a kick back up or not. So Tony is asking about the natural gas relationship with the dollar. In the past, a lot of the commodities, the dollar-denominated commodities, were much more correlated with the strength of the dollar. Now, again, on Friday, we saw the dollar went up and natural gas went up. So again, that's, the correlation has broken down recently. So normally when the dollar went up, gold, silver, oil, natural gas would all go down because they're dollar denominated commodities, and vice versa. If the dollar went down, commodities went up. So that's kind of the trend one would expect. But again, that correlation with the dollar as well as the data has, in my humble opinion, has broken down recently, and things are trading much more on a technical basis. And I'm open to hear others' opinions in those regards. But what do you think? You can always comment in our Discord in the comments below our video. What are you seeing? What do you think? So we see oil, tested just above 80, then broke down below 80. 80 is kind of that mark. So if 80 is now acting as resistance, we'll have to see if we get a retest down to the 75 level and maybe even the 70 level and get a bounce from there, or if it's going to break back up above 80 and use that 80 level as a support. Here's the steep downtrend in natural gas. It looks like, maybe a bottom, so we'll see if it swings back up from here. See, again, gold is holding up above 1900. Dip back down a little bit. We'll see if it continues its uptrend. Silver's been consolidating, been pretty flat, so we'll have to see if it gets a push back up and makes a run back up, or continues to consolidate or break down. Copper looks like it, kind of peaked and rolled over. Palladium dropped off, and tomorrow we'll talk about how we're looking to potentially play and benefit from this drop off in palladium. See, the commodities have been very mixed. See, coffee made a big rebound. We see lumber made a big jump late in the week. I'm not really sure what the news behind that is offhand. Maybe somebody could share if you have a why lumber jumped up so much. Treasuries again is pretty choppy flat. Again, the yields they're low. They're still below 4%. The interest rate hike should push the yields on the bonds up. The curve's still heavily inverted. But again, the bond yields need to go up to the Fed funds rate or near that to be competitive. So we expect yields to go up, prices to come down. And again, we saw the dollar, looks like it got a support level pushed up late in the week. And again, the interest rate decision, with interest rates going up, we expect that to strengthen the dollar a little bit as well. Okay. So let me grab a drink and check the chat for questions, and then we'll talk about strategies, and we'll look at these tools as to how we can try to figure out what is the Fed's next move now. Okay, here's a couple tools that I wanted to share with you in terms of, trying to figure out what the Fed's next move is now or at any time. If you want to see what others think in terms of what the Fed's next move is going to be, I have a couple tools that we'll look at. And then also I've added the links to both of these tools under reference links on the links panel on our homepage. Our homepage is beachbumtrading.com, bum without the U. So if you go to the links section of our homepage and go to reference links again, then you can find here's the CME FedWatch tool and also the Fed rate monitoring tool. So if you ever want to get back to these tools to see what the predictions are for the Fed rates, you can find them in the reference links section under links on our homepage, again, beachbumtrading.com, bum without the U. So we hope that helps make it quick and easy to get back to these at any time. So I'll close that and I'll open it from here. So let's take a look at these two tools. So first we'll look at the CME FedWatch tool. So you can see this gives us the probabilities as the FOMC rate moves. There's got a lot of various information right now. You can see the probabilities. Let me zoom out just a little bit so we can fit that in. So you can see right now the vast majority is betting 98.4% say it's going to be a 25 basis point hike. You've got looks like 1% no hike, and you don't have anyone betting on a 50 right now. Now, there's also a way to see the dot plot. So that's the Fed's predictions as to where the rates are going in the future, which you'll hear CNBC, etc. will talk about the dot plot. So you can see where the mean rate is. They're talking about a mean rate is around 5. 24, the mean is kind of decreasing. So they're in 24 and beyond, they're talking about lower interest rates. You can see there's a couple dots, way up above 5.5. So there's some Fed officials that, and I've heard them mention, 5.4, 5, above 5%. You've got some people holding that for a longer period of time. So again, I'll let you explore this tool in further detail. You can get a table of the probabilities for the various Fed funds rates. So again, we can see the vast majority is predicting that the rate's going to be 450 to 475, 98.4%. Again, very small percent, 0, no hike, and nobody's really betting that it's going to be a 50. So boy, if they came out with a 50, you could see a pretty violent negative market reaction. So be prepared. And again, if they came out with no hike, that would be unexpected. So how would the market react? I think that would depend more on Powell's comments than on the actual than the actual rate hike itself. So again, you can go here at any time and see what the change in the probability of what people are expecting the rate hike to be. It changes, constantly as this economic data comes out. The predictions will change based on that. So that's one tool I wanted to share with you as a way to figure out what is the Fed's next move now. The other one is on investing.com. So it's called the Fed Rate Monitoring Tool. And again, you can find direct links to both of these on our homepage. So again, another way to see what the guess is here. Again, they're saying the same thing. 98.4% say it's going to be a 25 basis point hike. So 450 to 475. 1.6% say no hike. And then again, you could see, how that probability has changed. So actually the previous day it was even higher. Previous week it was not as high. So based on the economic data that we got this past week, they have increased the probability that we're going to get a 25 basis point hike. And that is the consensus that I'm hearing around, that everyone's expecting a 25 basis point hike. So if we got a 50 or we got a 0, that would not be expected, and we could see, significant market reaction, negative if it's higher probably, and probably positive if it's lower, unless Powell comes out and says the reason they're not hiking is because they think the economy is really bad. But the economic data I'm seeing does not seem to indicate that there's a weakness in the economy that would justify, them saying the economy's bad. We see the job market looks pretty good, GDP is positive. So there are comments that under the covers there's some weakness, and that we might see that going forward. But so again, I'll let you explore this. You can see the probabilities into March. So right now they're looking, it looks like another 25 basis point is the prediction for March. So nobody's expecting a whole lot more. They're expecting a 25 and then a 25 again in March. Again, this will change all the time, and you can revisit this tool to get those Fed interest rates. So I hope that helps. Let us know in the comments below if you're already familiar with these tools, if you find them helpful, if you have any questions about how to use these tools, etc. We'll try to reply as soon as we're able. So we've talked about the January Barometer, the January effect, and that, and again, you can listen to those videos about what is the January Barometer. I want to quickly take a look and see what the January Barometer is saying right now about what kind of January effect we've currently got. We're almost at the end of January. So let me zoom. There we go. Get to performance. So again, we see all the indices are positive for the month of January, positive for the year to date. So the January Barometer is saying, the markets are up, and based on how the January Barometer predicts for the year, as you'll hear in that video, this bodes well for the indices for this year. So again, you can hear, the historical basis for that. And the significance, how accurate has it been, etc., in those videos. But again, right now, we've gotten a very positive January effect this year, and the January Barometer is pointing up for the year. So again, I hope that helps. Again, you can find this on investing.com, go markets, indices, and then hit the performance tab on the index, as we've shown. Welcome, Captain Chuck. Glad to see you. I don't recall seeing you in our chat before. Welcome. Welcome to the BeachBum trading community. So let me talk quickly about some other strategies. We talked about layoffs. We talked about layoffs last week. And I pointed out that what I'm seeing, and in my opinion, as these tech companies in particular are announcing layoffs, you'll see that the market is taking that as a positive and pushing their stock price up. Assuming they're being more fiscally responsible, they're tightening their belt, they're going to be more resilient to a potential recession or even just a slowdown in the economy. So as you hear more and more, these tech companies are announcing layoffs. I also heard Goodyear, so I'm hearing now, and also I think it was GM or Ford, one of the auto companies, starting to lay off, and I took that to mean, now the manufacturing companies are announcing layoffs. So you're seeing this start to trickle into the rest of the economy. So keep an ear out when you hear one of these layoffs. Right now, the market is reacting positively, and there might be an opportunity there. Also wanted to mention ChatGPT and the current hype of ChatGPT and AI. You're starting to hear about ChatGPT on the mainstream media. Everybody's now talking about AI and looking at stocks to buy and take advantage of this hype of ChatGPT and AI, and there is an opportunity there on that hype. But I wanted to resurrect a couple of my old videos on how to make money using the hype cycle. There's what's called the Gartner hype cycle. If you're not familiar with that and what that means, and how you can make money trading the hype cycle and avoid getting hurt by things that are overly hyped and at peak hype, you can see this video in the link in the notes here, as well as on our BeachBum Trading YouTube channel. I would highly recommend, if you're not familiar with the Gartner hype cycle, that you understand how this works. Also, the technology adoption life cycle, and again, how to make money based on adoption, crossing the chasm, etc. Because in my humble opinion, when you start to hear everybody, when your shoe shine boy and your Uber driver and your grandmother are talking about ChatGPT like they were talking about NFTs last year, that should be a warning that that's potentially peak hype, and we might be falling into the trough of disillusionment. When people figure out ChatGPT won't cook your dinner, it won't wash your car, they might be a little disillusioned, and that causes a decline when people's expectations get out of line with reality. Now, I love ChatGPT. I won't bore you with my history in these areas right now. It's very beneficial. It's saving me a lot of time, and some of the things I do. But again, it's understanding where its strengths and weaknesses are, what its utility is, and using it for what the benefit is. So again, I am working on a series of videos. One will be coming up tomorrow on ChatGPT on our other channel, which is Virtual Consulting 101. So you can subscribe to our other channel. And again, I'm working on a whole series of videos on what is ChatGPT, how do you use ChatGPT, and examples of how I'm using ChatGPT. So I'm seeing the comments, all good. Um, yeah, I'll try to wrap up pretty quickly. We'll talk about options trading strategies. We've been starting to talk about our options trading strategies that we're, selling covered calls, selling cash secured puts. We sell covered calls when stock we hold goes up. We buy it back when it goes down. We sell cash secured puts when a stock goes down, buy them back when it goes up. And we're rethinking and we're sort of building systems and automation around supporting these trading strategies. And we'd love to have your input, your feedback in our Discord, your experience with options. How often have you seen them get assigned early? How do you determine the best stocks against which to sell puts? We will review tomorrow our new automatically updated Google Sheet where we are trying to build tools to help us figure out what stocks and at what price, in particular in this case, to sell cash secured puts. So again, come back tomorrow. We hope you've already subscribed to our YouTube channel or BeachBum Trading YouTube channel. If not, please subscribe. Please hit the bell icon and select all notifications so you're notified whenever we release a new video. And again, tomorrow we'll go into more detail into the stocks to watch on our top swing trading stocks to watch list, as well as ETFs. We'll review all our ETFs in our ETF Google Sheet, and we'll also dig into more detail about opportunities we see for potentially selling puts, in our case, mostly cash secured puts. So again, we hope we'll see you again tomorrow. If anybody in the chat has any last minute questions, I'd be happy to entertain any last minute questions you might have, and then we'll wrap up. And hopefully everyone will come back tomorrow, Sunday, 10 a.m. Eastern Time, same bat time, same bat channel for part 2 of our weekly trading game plan for the trading week of January 30th through February 3rd. And again, we'll be selecting individual stocks, options again that we're looking to trade next week, talking about additional trading ideas, additional trading strategies, how we're going to use all this market data and these economic events, how are we going to trade the Fed's next move coming into this week. So okay, if anyone has any further questions, feel free to put them in the comments below this video. Again, we hope you join us in our Discord, our BeachBum Trading Community Discord. You can find an invite. It's free to join. You can find an invite in the description box below. We also have a Facebook group. You can ask questions in any of those forums, and you can find links to all of our social media sites, as well as the invite to our Discord, etc. Under social media in the link section of our homepage. Again, homepage is beachbumtrading.com, bum without the U. So again, you can find links to all of our sites, and we hope you'll join our community, and we hope that you'll help us grow the community, build a community. We've got a great group of BeachBum traders that all help each other out. You can see in the chat, everyone's helping each other out, sharing ideas. That's why we're all here, is to help each other out succeed in your trading career. That's again why we do all this, why we're here, and we hope you will help us grow the community, bring in more traders. Again, our goal or our objective is we think you can make money trading in any market condition, and that's the message we try to convey. So again, hope to see you all again tomorrow, and have a great rest of your Saturday. Thank you for joining us. Bye.